Hello, everyone. Welcome back. Today, I have a very special guest. She's one of the investor, and Jen. She's going to talk about the how she purchased a single family home rental property using her self-directed IRA, and on top of that, she can use a non-recourse loan to leverage her IRA. Very interesting story. Again, welcome back. This is Seewing Yee from the Yee Real Estate Network. And welcome, Jen, to this video.
Very happy to be here.
Thank you for your time. Just quickly, so here's the thing, what Jen has gone through. Jen came into our real estate network, with, she attended a class, online class at Pasadena City College, a real estate investment class that I taught over the Zoom about a year ago, I think, maybe a year and a half ago. Not sure. And then she proceeded to contact my organization. Then we had a consultation call. Then we'll go over the details. I don't want to go over too much details, but so Jen, in case, just goes to show you, and if you have a lot of focus and motivation and discipline and do the work, you can succeed in real estate investing. So before Jen will talk about her journey, my take is that Jen have no previous real estate experience whatsoever. She never owned any rental property, and yet she took the plunge. She had a lot of courage, and she was able to identify the real estate market she wanted to pursue. She was able to analyze a rental property that we have within our network to purchase, and she did all the paperwork very diligently, using her self-directed IRA to buy real estate. Furthermore, she used a non-recourse loan. And to be honest, Jen, over the past 20 years I've been doing this, coaching and consulting, rarely I have seen not only a newbie such as you, but I have many of our real estate experienced real estate investors, the sophisticated real estate investors have done a lot of deals in their lifetime. They have never heard of buying real estate through their self-directed IRA. And some of them even heard about that. Some heard about it, yes, but they never heard about the power of using leverage, a non-recourse loan to leverage the IRA to buy more property than what the IRA have able to provide. So I'm curious to know as well. So I'm going to ask you this question, Jen. So what is your previous real estate investing experience, and what is your motivation to take the plunge to right off the bat? Most people, both newbie real estate investor, when they buy the first properties, they use conventional financing using the name 20 to 25% down payment to buy a rental property. And yet you took the plunge, you went straight into using a self-directed IRA to buy a rental property and even use a non-recourse loan. So tell me, how are you able to maneuver, go through this so-called, confusing and sophisticated process and doing all the paperwork with IRA and non-recourse loan and successfully close escrow as we speak? You're able to obtain a tenant to rent your property out. Now you are earning your return through the tax pro strategy associated with our self-directed IRA. Without further ado, go ahead and take it away, Jim.
Sure. Actually, I did have some experience purchasing. Previously, I purchased a condo for my own residence using a conventional loan. But yes, before your class, I did not know that one could use their own IRA to purchase property. And definitely with your guidance and also with your network, that was really crucial, because knowing that it's possible is not the same as being able to know who to talk with and who to be able to vet and who you can trust. And so then I did have to start at the very beginning, in terms of my investment portfolio, it was pretty typical of I had a 401k, I have some IRA funds just saved up from work. And I learned from you that I could take my 401k, be able to transfer the funds into a self-directed IRA, and then use that IRA to purchase a property.
Let me pause one moment. For those of you audience out there, you cannot use your current employer 401k IRA to buy real estate. You have to use a previous employer's 401k. And that's what Jen did. You use your previous employer 401k, then roll that over into a self-directed IRA, right? Go ahead.
Yes. Yeah. So yeah. And that was a really big step. And I wasn't aware of having that spending ability through my previous company's 401k. Yeah.
Mm-hmm.
Yeah. Knowing also the right self-directed IRA companies to talk with was also very important, because they're not all the same. And we saw through that where some places, if you were to purchase real estate, they could have limitations on where you could purchase. So finding the right IRA custodian is important. And then the other big step was knowing who to work with, what real estate developer was going to be able to work with you on, or with me in this case, on the purchase. Yeah. And that was also through your network as well. And
yeah, why did you decide to buy your property at our location in Florida? So what is your research and due diligence? How did you come to the conclusion to buy that in that location? Because you live in Southern California, by the way, right?
Yes. Yeah. That's the other big, those are big questions, because the housing market in Southern California is very challenging. And so to be able to make a purchase that, for one thing, for a rental property, it made sense to look at another market that would also be able to perform well over time. And hence there's a bit of a siting process that we had to go through to just identify what would make sense and what the different options would work the best for what I was willing to do. I think you had provided several other options and allowed me to make the decision according to what I felt was best, what it checked out with my own research and understanding of current and projected markets. And the Florida market, in this case, looked very favorable.
Jennifer, normally when an investor after they transfer the funds into a self-directed IRA to a custodian, then you have to buy the rental property with these full cash with the entire IRA. Your situation is very unique. You have approximately, don't quote me, you have approximately a little bit more than $200,000 of self-directed IRA available. Yep. You could have done one or two things. You could find a market, find a listed market where you can buy a rental property for $200,000, like all cash. That's simple, right? All cash purchase and with the IRA, and that's fine. But you decided to buy the single family home rental property in Citrus Springs, Florida, Central Florida, for approximately $264,000. So the audience need to know, just because she want to buy the $264,000, but you only have approximately around a little bit more than $200,000. So you are short. You don't have enough IRA to buy that $264,000. So walk it through what options were available to you to able to accomplish that in your own words.
Yeah. And that would be through a non-recourse loan. And also through your network, I was able to be connected with the right bank that would issue a non-recourse loan, so that I could, in this case, I had to put down 70% of the purchase of the property value or the property price, and then have a loan that would cover the remaining amount. Yeah. And I think that also was in line with my view of the investment value of the property, where with a renter that's in place, then that would immediately be, the renter would already be paying off the mortgage of that loan.
Yeah, Jen, one thing I admire about you, again, you are a beginning real estate investor, right? And of course, you previously bought an older occupied property. I got that. But as I watch and monitor your progress, it took around 2 months for the paperwork to go back and forth. And the paperwork to do the IRA and the paperwork to do non-recourse loan is not simple. I don't know what's your skill set, your mindset. If I were in your position, having to do all kinds of paperwork, back for all the technical documents you have to analyze. How are you able to overcome all that, the obstacles? How you organize yourself to do so many multiple people you have to do in order to make this transaction a successful transaction?
Oh, I'd say it depends on the team. And each of the people that I had to work with on the real estate side of the developer, on the lender side, and on the IRA side. And so I was going through a challenging time, and my attention did have to get diverted. But then with the right folks, when you're working with the right people, that makes your own job a lot easier. And with all of the various parties that I was connected through your network, they're all very diligent. They spoke very, clearly. It was pretty straightforward on what needed to be done, so that even with your attentions distracted or diverted elsewhere, it's still really possible to get it all done. Yeah. And I was even remote too for most of the time. Yeah. Nowadays, it's very possible to get a lot done in a short amount of time when you have the right people.
Yeah. So you did it remotely. You identified the rental market you want to buy, which is in Central Florida, which is Citrus Springs in the northwest section of Central Florida. And then you connected with our team, like you said, Southern Impression Homes, new construction, 3-bedroom, 2-bath, around 264,000. Now let's go over the 3 slideshow I have briefly. So basically, we use a self-directed IRA, which is $200,000 of IRA, then with a non-recourse loan. So let's briefly go over some of the team. This is the self-directed IRA custodian. You work with this company to facilitate the paperwork. Then you proceeded to work with our referral, the non-recourse lender, First Western Federal Savings Bank, Mr. Roger St. Pierre, and you did the 30% non-recourse loan. And then when it's all said and done, then I took the liberty of creating this so-called pro forma. So this pro forma pretty much indicates that the purchase price, I'm sure, so you can't really see some of the numbers, but let me walk it through. The purchase price, $264K. You put 70% of the IRA down payment, which is $185,000. Then you pay some closing costs and some cash reserve. You need I think 6 months of PITI, principal, interest, tax, and insurance cash reserve in the form of an extra IRA to quantify for this transaction. And here are the numbers. The monthly gross rent. By the way, the tenant is already in there. You already got the tenant already living in the rental property even before you close escrow. So that's good. So there's no vacancy involved. So the rent was $1,695. And then the non-recourse loan, because the interest rate is much higher, so one would think you could only qualify based on the rent to value ratio of this property. Again, I'm not going to go over too much details because this video, I want to keep it real short and simple. But the non-recourse lender qualification is such that they can only lend the 30% LTV, loan to value, based on the interest rate. So the non-recourse loan, the amount was, what was the amount? Did you see it here? The
79.
Yeah, 79,000. Yeah, is the non-recourse loan. And unfortunately, because of the high interest rate environment, the interest rate on your non-recourse loan is 8.5%. It's quite high. So your monthly payment on the loan itself is, as you can see, $611. So $1,695 minus $611 monthly mortgage payment on non-recourse loan, minus the taxes and insurance and property management fee and what have you, and you still end up with a positive cash flow of $757 approximately. So because you bought everything inside the IRA, you do not need, you bought this property in the name of the IRA. This means you're not buying under your name. Because you're not buying under your name, you're not getting a loan under your name. And also the non-recourse loan, in case the regulation is such that you default on the property, the non-recourse lender can only go after the property, which is a non-recourse. That's what the purpose, the technical definition of a non-recourse loan. They cannot come after your personal asset. The lender cannot come after your name, what you own, with your personal asset. So that's a very reassuring for an investor, because and also this cash flow, this monthly cash flow, $757 monthly net cash flow, goes back into the IRA, is tax deferral. So again, you do not need to do a FICO score on your name. You do not need to qualify as an individual because you buy in the name of the IRA. Everything grows tax deferred. The monthly cash flow you obtain will go back into the IRA tax deferral. Then when your property appreciate tax deferral, your cash flow accumulate into the IRA, and then the ideal goal is to at age 59 and a half or older, then you could withdraw the cash flow for your retirement, right? If you withdraw your money from the IRA before age 59 and a half, you're subject to 10% early withdrawal penalty and the ordinary tax you have to pay on the amount of the withdrawal, which is at your ordinary tax bracket, which is a no. Using the self-directed IRA to buy rental property is really no different than using a self-directed IRA for any other purposes, mutual fund, stocks, bonds, whatever. It's a tax-deferral account, and you do not have to file, you do not have to report anything on the federal tax return. Again, I'm not a licensed tax advisor. Everything we discuss on this presentation is for educational purposes only. For those of you people you're watching this video, you need to consult your own licensed tax advisor and financial professionals to go over your situation to determine whether using your self-directed IRA to buy hard assets, such as a physical asset, rental property, is appropriate to your situation. I think I cover most of the information. So to Jen, when I guide you along on this strategy, again, you're short, you only have like 200 grand IRA, and you're trying to buy this 264,000. That's why this non-recourse lending, even though it's 8.5%, one would think, another person might think, 8.5%, the interest rate too high. I don't want to do the non-recourse loan. They don't want to do non-recourse loan. They don't want to pay 8.5%. Then they cannot buy this $264,000 property. They have to buy a property less than 264. How do you accept the 8.5% non-recourse loan interest rate and still continue to pursue this strategy?
Yeah, well, I think that the numbers speak for themselves. If you just looking at the cash flow, when you net positive, then that's really the big picture. And then also the other strategy that we were going to put in place too is the monthly payment. The mortgage is about just over $600.
Right.
And my plan is to apply the majority of the positive cash flow into the monthly payment so that I end up paying the principal off sooner. And therefore, in the end, you end up paying a lot less of the interest without any penalty. But I think the big picture is that just looking at the numbers and working out what the net positive is after you take into consideration the expenses and costs. If it's positive, then that already speaks for itself to make it work.
Yes, I agree with you. And yeah, you really understand. Again, using self-directed IRA is not that simple. A lot of people are not even aware of it, like I said before. And using non-recourse loan, most people are not even aware this is doable for you to embrace the strategy, for you to take the plunge, take the risk to buy your first rental property using your tax deferral account. So for those reasons, I really commend you for taking those massive action. It's all about taking action. Okay, what else? So then how the other team, the property management and the appraiser and the title company, and you're able to secure a tenant as we speak. Tell me how the closing process, how did it work?
Oh, it was so smooth. It was a new construction, so that already simplifies a number of the risks. Then I had to get the appraiser in. In this case, we didn't get the property inspection, but I think this is a rare case where that's acceptable because it is a new construction and the tenant is already in place. The assessor's report came back very favorable, so there was no problem in the loan. And yeah, just the process of signing the documents was very easy and pretty hassle-free.
Okay, now you're using their in-house property manager, the Suncoast.
Oh, yes.
It's part of the whole turnkey approach with the builder, with the network that we have, Southern Refreshing Homes. So tell me about the property management and the technology available in the login portal you have at your disposal. Tell me about the system, process, and procedures, how it makes your purchase and long-term investment in this market with this network very, very simple. Like it's almost totally passive. You own the property almost 3,000 miles away. You haven't even physically visited the property. Like you said, we trusted our team, myself, my organization, and our network teams. So tell me about the login portal, the technology, how simple for the future for you to manage your property or so forth. Tell me about that.
Yeah, sure. Through Suncoast, yeah, they have like a property management system. So you just log into the portal to see what the numbers have been. And then they handle they're basically the interface with the renter. And even they would help with, if there is a vacancy, that they would help find another renter if that were the case. And then in terms of, and they also manage the maintenance too. I forgot, maybe like with maintenance costs that are maybe over 500 or ones that I need to approve. Anything under that is just what they would just go ahead and take care of. But again, since this is also a new construction, then currently the maintenance is like 0 to like nil. Yeah. So it is just, it is very hands off. And all I need to do is just be able to monitor what comes in and then what needs to go out. Very easy.
Good. Very good to hear. Let me backtrack a little bit. Now, you have this loan remaining, $70,000 non-recourse loan. You mentioned that you have this idea. I think I might have made that recommendation to you. Since your retirement is so far away, age 59 and a half, so you got a number of years left before you can retire. Getting this high cost interest rate loan is not that critical, not that concerned, because the cash flow, according to the pro forma, you're getting around almost $800 monthly cash flow from this purchase. So your intention is you're gonna use the cash flow, monthly cash flow, to accelerate the non-recourse loan, to pay it down, to pay the principal down once a month. Now, I taught this strategy for investors for several decades. If you pay it off on a 30-year mortgage, for example, if you pay extra principal monthly, you can accelerate and pay off the 30-year loan in about 10 years, approximately. In about 10, 13 years, since this rental cash flow is a tax deferral account anyway, you might as well apply using the domino effect. You pay one extra using this monthly cash flow, pay it monthly, once a month, to pay down the non-recourse loans. In about 10 years, this $70,000 non-recourse loan will be wiped out. So you have no debt on this underlying asset, on this IRA, on this rental property, single family home. Then, what is your monthly mortgage on your non-recourse loan right now, approximately?
I think it's about $660, something around the $600 range. Yeah.
Think about this.
Even if I didn't take the extra cash flow to pay off the principal in advance, the numbers are already very favorable compared with the rent that this property is bringing in. But yes, the idea is to pay it off sooner and then therefore pay off the loan.
Exactly. So currently, I know we just talking numbers. The current cash flow, 757, according to this pro forma, you paid off the loan in about 10 years or so, $600. So you add the $600 back into the cash flow. So 600 plus 757, you have like almost $1,400 in your pocket after you paid off the non-recourse loan. And then if you calculate the rental increases year over year, 3 to 5% rental rate increases. Then when you retire age 59.5, not only you have no debt on the non-recourse loan, you have a $1,300 monthly net cash flow, not even factor in the inflation and the rate increases over time for the next 15, 20 years until you reach 59.5. And when you do reach age 59.5, you don't have to withdraw the money. You could keep the money in there, growing tax deferral. Your cash flow going tax deferral, your appreciation of your property going tax deferral, and all that. Yeah, that's a big picture. So when you retire age 59.5 or older, who knows? Your property currently $264K could be double or triple in value, tax deferral, and your rent will continue to grow. So, you have a nice chunk of cash flow you can trigger when you withdraw the money in time and still keep the property forever. Keep your IRA property and just trigger you can draw the retirement income, the cash flow at retirement, and you get to pay tax on it. That's fine. But anyway, that's a big picture. So the takeaway, Jen, what's your takeaway? What has been, look, 3 months ago, you did not own any property. And now you'll have a income producing property already rented, very good cash flow. You bought it in a very good market. You've gone through all the obstacles, the sophistication of learning about the IRA and non-recourse loan on the fly. You're learning what you're doing with the help of myself and my team. So what's your takeaway from your journey from this particular purchase experience?
My takeaway is that it's wasn't as difficult as it first sounded. And then even like doing things like it's even possible to build your own pro forma, like the numbers and the math isn't necessarily that much of a mystery. And when you can figure out that you can pay off the loan in 10 years or less, just because we did factor in a bit of conservatism, it all becomes very attainable. And now I'm looking at a IRA that was initial or a retirement savings that was initially just over 200,000 that now has the potential to be multiplied several times over by the time I'm ready to withdraw from it. And then I have more options. That adds a lot of comfort and satisfaction to know that something is being done with my savings that will pretty much take care of itself.
Yeah, Jen. Yeah, and we're not going to talk about your other real estate goals. You're very ambitious. You're very focused. You're very committed. So you're going to continue to pursue your real estate journey. So I really appreciate that. Now, again, let's be real. Most newbies out there, as we speak, because of the challenging housing market out there, all the negative headlines, all the doom and gloom, the world's coming to an end, the world's crashing, whatever. A lot of newbie real estate investors, most of them are staying on the sideline, and they are scared to death, and they are not reaping the benefit. So you are newbie, and you did it. So you took the plunge. So what's your, I don't know, what's your advice to the people that are sitting on the sideline, being paralyzed by doom and gloom and fear and all this?
I think it's really about thinking for yourself and to look at the facts and separating what's hype and emotional type of language versus what are the actual realistic numbers that come out. There's that the math has to work out, but it's all very clear and it makes sense. And when you look at what the housing market is like currently, and then you can also get a sense for the future, it doesn't become a very difficult solution because it does make a lot of sense. And when you have someone else who is paying off your loan and you're still getting like the benefits of the increased value in the property, it's hard to turn away from that because that just, there's so many positives from it that beats many other types of investment mechanisms.
Jen, very well said. And people out there, not only newbie investors, experienced investors, should take notice of what you just presented. And you are inspirational. You are very encouraging. You have a positive attitude. You have a good mindset, which is all great attributes for any successful real estate investors. As we conclude this presentation, I really appreciate your time to share your experience, to motivate and inspire others to do what's best for them, and regardless of the negativity around the housing market. Because if you invest long term, if you invest over time, you buy good cash flow market, you buy in a good location, you surround yourself with a trusted team. So that's what it's all about. Am I right?
I can't thank you enough, Seewing, for taking the interest in really wanting to help others and being supportive and to really be willing to share your experiences, because not everyone wants to share what their own journeys and lessons and secrets are. This was so much about your guidance and then also the connections that you have in your network. And they're not just, it's pretty clear that you've already vetted out the people and the companies, and that's golden, because all it takes is like one link that is broken to really sour the entire experience and the investment. And in this case, it was really a good team to have working simultaneously. Thank you.
Thank you for your kind words, and it touched me greatly. Was saying this, it just makes me love what I do. I love to help people like you and to achieve financial dreams and goals, and which we all deserve. Thank you so much one final time, Jen, for sharing your experience. So that's all I have to say. Thank you so much, everyone, for watching. This is Seewing Yee. Enjoy, and I'll see you on the next video. Have a nice day, everyone. Bye-bye.